Hello folks, this is Les Goldstein with our May 2016 Educational Economic Update from Personal Financial Strategies Incorporated, located here in beautiful Park Ridge, Illinois. As always, we will give you an update as to the major events that influenced stock and bond market behavior in the last month, and we'll share with you some insight as what this could mean to you as an investor. First of all, the Federal Reserve Open Market Committee met in late April and unsurprisingly decided to leave interest rates right where they are. Though the Fed still expects to raise rates this year, central bankers continue to move carefully and slowly. Though the Federal Reserve seems ready to raise interest rates as soon as economic growth picks up, the latest economic data doesn't support this narrative. Before the meeting, many investors were expecting a June 2016 rate hike. However, the Fed's cautious stance and the November election make it more likely that the next rate hike won't take place until December of this year. Investors also got to look at fresh economic growth numbers. The advance estimate of first quarter gross domestic product showed that economic growth stumbled, increasing just 0.5% in the first 3 months of this year. That's a sharp decrease from the 1.4% the economy grew at in the last quarter of 2015. The weak growth is concerning, but it's not something economists are panicking over. Slower spending by consumers and governments, as well as cutbacks to business investing stemming from plunging crude oil prices, all contributed to the dismal growth last quarter. The good news is that some economists don't expect the weakness to stay with us for the remainder of 2016. As always, past performance doesn't dictate future results. However, first quarters were followed by stronger quarters in several of the last few years. Energy prices also look to be stabilizing, which will hopefully spur business investment, and consumer spending is expected to pick up later this first quarter. First quarter earnings seasons kicked off in April, and the low expectations investors had about performance paid off, because that's what happened, and it did leave room for some positive surprises. Out of 209 Standard & Poor's 500 companies that have reported so far, earnings were down 5.5% for the first quarter of 2015, and revenues were down 1.6%. Slowing growth indeed. However, over 75% of those firms were able to beat the lowered expectations, showing that their managements in general did a good job of preparing the market for disappointing results. Even when the earnings picture is weak, better than expected results can give individual stocks a positive pop. Overall, we see that U.S. firms really struggled with growth in the first quarter of 2016. The energy sector was a serious drag on the overall S&P 500. That earnings sectors are down 114% over the same period last year. That's 114% down. The technology sector also generally underperformed as big names like Apple, Google, and Microsoft failed to live up to expectations built on previous quarters. To sum it all up, though the economy continues to chug along slowly, growth was hard to come by for U.S. firms in the first quarter, and many challenges still exist. Slow economic growth also complicates things for the Federal Reserve, and we're not likely to see an interest rate increase anytime soon. However, it looks like we have some brighter growth ahead of us in the second quarter. We'll know more in the weeks ahead. That's it for our May 2016 Educational Economic Update. As always, if you have any questions or concerns about what we've discussed, please call our office at 847-268-3670. That's 847-268-3670, and ask for Robert Hart, Yvonne Haverland, or myself, Les Goldstein. In the world of what's happening at Personal Financial Strategies Incorporated, let me just share with you that on Tuesday, May 17th, we have an educational workshop here in the office. That's Tuesday, May 17th. If you'd like to learn more, check your email or call our office at 847-268-3670. This workshop will be suitable for your adult children as well as yourselves in the world of retirement planning and legacy planning. That's it for the month of May 2016. Please remember that nothing we talk about here is a recommendation to invest in any particular security or sell any particular investment security. If you would like to discuss your personal financial situation, please give us a call at 847-268-3670. We would be happy to speak with you. Thank you again, and now for a required regular disclosure. While we believe that the information presented in this report is accurate and reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice for the solicitation or purchase or sale of any security. Please consult with us before making any investment decision. Again, Les Goldstein signing off for May 2016. Have a great month. Take care.